welcome to this Monday edition of My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So Friday was a big day for the markets. We opened sharply higher. The market initially taking that jobs data as a positive, as 3 rate cuts are now penciled in by the Federal Reserve into year end. But then we saw a open higher and a hard sell-off a majority of the day, to the point where the markets, the S&P, had opened at a new all-time high, sold off, and closed negative. And again, if you're looking for institutional selling, that was it on Friday. Not only that, but insider selling, the CEOs, the CFOs, the COOs continue to unload at paces I have yet to see in my career. Now, does that spell doom and gloom for today? Not necessarily, because the buy the dippers are trying to fight back today, lifting the markets up in early trading. Let's flip over to the S&P futures and take a look. Look at this, guys. This is just, I get giddy when I look at this stuff because it's so cool. It's so unbiased and just raw, and it gets me pumped up because when I have an edge and I can get you guys that edge and just to understand the levels, it's freaking cool. All right, let's go into the charts here. So look at this. So we had the gap up on Friday right here. Where was the low of the day on Friday? Look at that, right to that line. And so we've been discussing how this trend line has been the major trend line for the S&P, where if we break and confirm below it, the markets then have a game over scenario, right? That's where we start to see that downside accelerate. As long as we stay within this wedge pattern, the 2 trend lines that are converging are called a wedge pattern, then the markets can kind of chop around. Looking at the QQQ, much the same. We have our larger parallel here. We did close below it last week on Tuesday, but again, never confirmed the breakdown, which can always be a signal of a fake out, and that's exactly what it is as the markets went up until Friday's gap up and then came back in. Notice how the QQQ did not make a new all-time high versus the S&P. Again, that continues to show a little bit of weakness in the tech sector. All right, so if you look at things like the semiconductors, the SMH didn't make a new all-time high. Broadcom did, which was a semi, but it closed at the lows, which is a very bearish signal. NVIDIA is almost 10% off of its all-time highs, right? So again, there are weak signals within the tech sector that are keeping the NASDAQ 100 from outperforming like it has historically, versus the money flow has slowly been rotating into the S&P 500. All right. Speaking of which, I just want to quickly go over that Broadcom on Friday in this My Trading Game Plan. I gave you guys this exact trend line, and I said, guys, this is a short up here between 350 and 353. It actually opened a little bit higher than that, and it sold off $20 to the downside. That was a great alert. And the dollar, let's touch base on the dollar. The dollar continues to move a little bit lower. It's still holding the longer trend going back to 2008. And I highlighted this on Friday because this is an epic chart. This is the financial crisis, right? The beginning of the financial crisis right back here in early 08. And this began the financial crisis where the Federal Reserve in the U.S. basically dominated the global sphere of central banking and the U.S. economy, right? And what's concerning to me is that not only have you broken this zone on the U.S. dollar, right? All right. But also it's now forming a bear flag. And if this level breaks around 96.50 on the dollar and confirms, you have a major breakdown on the US dollar. Robinhood today, folks, is up about 10%. They finally got added to the S&P 500. Now, this is an interesting chart, right? Because you have a chart that's off of its all-time highs of about $118. Now, for me, as a technician, I say, okay, this was an uptrend to its all-time high, and now it's pulled back. I draw my trend line, okay? And what I do is when I draw my trend line, I find a trend line here that is a fantastic gauge of where Robinhood broke down, right? And so we can see right in here, all in here, how it kept hitting and then finally broke, okay? Now, what does that tell me? Well, it tells me that on a retrace, which is what we're getting, there's a shortable level here on a retrace to the scene of the crime at around $113. And so the idea here is that you're at about $110 in the pre-market on Robinhood. But if Robinhood today pushes up to about 113, there is a fantastic shortable, probably day trade and swing tradable level here on Robinhood. This would be called a retrace to the scene of the crime.